So just for fun, I've created a 10 company dividend portfolio. Now, I'm not expecting that you would copy this exactly. It's more just for an example. I was just feeling like if I was to buy 10 companies right now, so I could build a really strong dividend portfolio, which companies would I put in it? So I did some research, and these are the 10 companies that I would put in a portfolio if I was buying now. Again, not saying that you need to copy this, because honestly, I can't tell you what to do with your money, and I kind of don't want that pressure anyway. So use this just as an example. Now, all of the companies that I've included have really good dividends, and they also have good dividend growth, which was really important to put into a portfolio. I've tried to do a good mix of different sectors, so you get that diversification, and also a different mix of different market capitalizations. That way you can get a really good range. Now, most of these are also franked, which is great, but not all. Using this portfolio as an example, I thought we could also go through and talk about which order I would actually purchase these in. There are two different ways you can do this. So we'll also talk about what I would do there. Okay, so let's have a look at the companies that I chose for this and see if you agree. So the 10 companies are ANZ, APA Group, Centura Capital, Eagers Automotive, Fortescue, Helia, IPH, JB Hi-Fi, Macmillan Shakespeare, and Nickel Industries. Now, they range in dividend yield. The average dividend yield for all 10 is 7.2%. There's various franking. Most of them are 100, but there's some with 0 and some with less. And there's 6 different sectors. So for the sectors, we have one bank. I've chosen ANZ. We've got APA for infrastructure for oil, gas and coal. An insurance company, we've got HLI. Industrial support, which you could also call tech because they do IP addresses, is IPH. We've got 2 mining, FMG and NIC, 2 retailers, APE and JB Hi-Fi, and 2 companies within the investment banking brokerage sector, CNI and MMS. I chose ANZ over the other banks, mostly because it has really good consistent dividends, but also that they've just purchased Suncorp. So I feel like that's a good sign. And they've done okay over the last 5 years. APA have strong, growing, high dividends. They have gone down in the past 5 years. So that's going to be whether you think that they can increase in price again, or whether you just want to avoid them altogether. Centura Capital, again, nice, stable dividends. So here's my first retailer, Eagers Automotive. Again, nice, strong, growing dividends. Fortescue Metals, I like it overall anyway, and it has increased over 128% over the last 5 years, but I mostly like it because of that dividend yield. So even though the dividends aren't as high as they were in 2021, still very, very strong and high. Helia seems to be growing. They've only been paying consistent dividends since 2022, so do keep that in mind. It is one of the smallest on this list in terms of market cap as well. IPH I put in because it has strong growing dividends, although it has gone down over the last 5 years. So it's just up to you whether you think that it would be a good inclusion. JB Hi-Fi is just a great company. And so even though its dividend yield is a lot lower than the others, I just think it's a really strong company overall. And it has increased 143% over the last 5 years. Macmillan Shakespeare, done really well over the last 5 years and has good, stable, growing dividends. And Nickel Industries, another mining company, done pretty good over the last 5 years. But for dividends, I think it's a nice high dividend yield and nice consistent dividends. So here are all the companies and their 5-year returns. If you held this portfolio 5 years ago, you still would be up 31%, which is great. I obviously can't guarantee that going forward, of course, because past performance is no guarantee of future performance. It's not always a bad thing to buy when companies are down, if you think that that's the bottom and they may go up again in the future. But I did choose this portfolio primarily as a dividend portfolio anyway. Let's imagine you're a beginner and you're actually going to choose these 10 stocks. Again, not saying that you should, just for an example. How would you purchase these stocks? In what order? Now, I'd personally, in the beginning, try to put an even amount in each. So say you save up $1,000 and put it into the first company, and then save up another $1,000 and put it into the next one, and so on, until you have, say, $10,000, and then you just start adding to the companies. You don't have to keep it completely even, but that's how I would start. Now, while you could choose any company to start with, I think that there's 2 main methods that work really well when you're building a dividend portfolio. You can either go for the highest dividend companies first. That way you're getting those larger dividends to start with. You always want to start with those larger dividends. Or you can start, if you're a little bit more risk adverse and you want to go for the bigger companies, start with market capitalization. Those are the 2 methods that I kind of like when building a dividend portfolio. Go for high dividend first, or you can go for high market cap first. It really depends what your risk profile is, and if you want that higher income first, or if you want a more stable portfolio first. Again, no guarantees, but so if you're going to go by dividend yield, Fortescue Metals up the top, Macmillan Shakespeare coming in second, and Helia number third, all the way right down to JB Hi-Fi, which I still think is a great company, but it has the lowest dividend yield. But based on market capitalization, ANZ being the top with 84 billion and Fortescue Metals 56, all the way down to Helia, which is the lowest with just over 1 billion. So there you go. I really hope you've enjoyed this video. It was actually fun doing the research. Why do I like doing research so much? Anyway, I hope you have a good rest of the week, and I'll see you in the next video. Bye.